Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Hello, Matt Justice for Tackle Trading. In the most recent newsletter that I wrote yesterday, I wanted to talk about the art of the reversal. The art of the reversal in the sense that we're undergoing a reversal right now in the marketplace. When you're looking at a weekly chart here, you can really start to see it slow its momentum right now. But to kind of understand the art of the reversal, and every market is a little different, every reversal pattern is a little different as well. But let's take a look at the last two bubbled marketplaces. And so I'm going to go all the way back to the .com market. And when you're looking at trend analysis and techniques and whatnot, you're always looking at higher highs, higher lows, and we're really looking at the higher high of resistance. So as you can see here in sometime in July of 1998, you've seen the market really establish resistance levels at 1190. Then it established its next level of resistance in July of 99. That's a one-year time frame that it took in that expansion of resistance, and that's not atypical in terms of you're in the middle of a bull market. It's going to take a long time for it to establish another resistance level. And we're looking at a weekly chart. We're not looking at a daily chart where you have multiple different support levels and resistance levels and pivots and whatnot. So it establishes resistance at 1435, an increase of 245 points from the one resistance in 98 to the one in 99. Then it comes all the way back up here and establishes resistance in March of 2000. After 8 months of driving back up, it establishes resistance in March of 2000 at 1555. That's an increase of 120 points. That is what we call slowing momentum, and slowing momentum is the first indication of a bearish reversal. The next indication of a bearish reversal is that of the double top. The double top occurs right here in July of 2000, and that is basically where you really kind of just hold your resistance levels. For the first time in years and years and years and years, resistance levels are held. It's not broken, and that should tell us something. That's 5.5 years from the time the .com started in 95. In terms of the breaking out of resistance, that resistance hadn't held, and now resistance holds. That tells us something. It tells us that the prior trend is over. Now, that does not necessarily mean that the next trend is bearish. It doesn't mean it's neutral. It certainly could be a continuation pattern. For example, you get a slight increase in support right there, and that would lead you to believe a little bit of an ascending triangle formation has happened, but it still doesn't break resistance in September of 2000 and comes all the way back down into the exact same support level in November of 2000, and that's the double bottom. Now we have an M formation where you go up, down, forming the M formation. The next most important signal is November of 2000 when support actually breaks. So it's in October 2000 when you have the double bottom. Then you have the break of support right here in November of 2000. You establish your first lower low in April of 2000, and then you form the kiss of death, which is the first retracement back up into resistance. You form that kiss of death pattern in May of 2001, and between the time you have slowing momentum, which was March of 2000, to the time you have the kiss of death, which is the last pattern that we're looking at, you also have a little bit of a death cross right here that coincides with the breaking of support as well. You had a grand total of 14 months in the reversal. Now, the entire market cycle is right around 7 years in total, from the time you go from the bottom of the starting of the bull market to the time you get to the very top of the bull market. You have about a 7-year cycle, and typically you're looking at about a year in the reversal pattern. Now, from the time you have literally the double top here in July and even slowing momentum in March, from the time you have these two cycles where you really kind of see the end of the trend, you're really only down from about 1550 down to about 1300, down about 250 points in the marketplace, which is about 15% in your retirement accounts. You can get back from that, but you can't get back what happens next. And what happens next is the crash. And it goes down, 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 finally finds a base right around 800 in the market before you start seeing the double bottom at the top, the double top, the breaking of resistance right here, and then, the birth cross is what it's been called once or twice there. And then you start another bull run up into the subprime market, and this is what we're looking at here is the years from the very bottom of the market in 2003 to the very top of the market in 2007. That's what we call the subprime market bubble, where market price action was really driven by not so much supply and demand, but access to money, low interest rates, housing market, subprime housing going completely, bonkers, and people pulling equity out of their homes and so on and so forth. But if you look at just kind of the same process we're looking from the time that in the dot-com reversal to now this reversal, you first establish your first resistance level here where the market's still cooking. You establish it in April of 2006 at 1330. You then have another resistance established in February of 2007 at 1465. That is an increase of 135 points. It then drives up again to establish another resistance level in July of 2007. It just so happened that July has been a very important month for the art of the reversal in the last two. That's when you've seen the slowing momentum in the subprime. That's when you saw the double top in the dot-com, and it only increased in resistance levels by 95 points. And so you had your first identification of the reversal in 2007 in July, and it only increased to 1560 up to about 95 points of resistance. And so that's our first indication. Our second is the double top. It occurs in October of 2007. The double bottom right here occurs in November of 2007. Support is broken right here in January of 2008. And if you fast forward just a little bit, you have the nice kiss of death pattern right there, which is basically a retest of the old support level it's broken. I mean, this was just a picture perfect reversal here. There's the death cross right there. You have the kiss of death pattern right here in May of 2008. Total time in the reversal, 10 months. Now, I've been asked in the past why this reversal in 2007, 2008 was faster than the one in 99 and 2000. The simple reality is the speed of the market. As technology increases, as people become more aware, as information comes out there, things are priced in a little faster. And I do anticipate from slowing momentum to the death cross, kiss of death, breaking of support, it probably will, very similar to 2007, 2008, maybe a little bit faster in the next reversal. Now, that's the two reversals in the past. What can we learn from that in its current price action? When we're just looking at this current price action, you got resistance levels that are established back here, here, and then right here. And right here you have it, and it's not the same. It's a little bit of a different picture here, but you're really establishing that first one at about 18. Oh, that would be about. Let me put my crosshair there again. About 1840. About 1840 in we'll call it February of 2014. Okay, then you increase your resistance levels really to right there at let's see, the month would be September of 2014, and that increases to about 2010. That is an increase of 170. And then you start to see your next resistance levels right into this level at the 2100 level. 2100 level, and you could put it back here or right here. It's very similar. I'm going to put it right there, and that's probably February of 2015. So February of 2015. And so right now, what we're seeing in the market is a tremendous amount of slowing momentum. We have not seen the double top to a certain extent. We haven't seen the double bottom to a certain extent. I think the market needs to come all the way back down to about 2000 to really see the double bottom. So you could argue that this might be a double top in comparison over there, but I think that's a little sketchy. I still see this as a little bit of an ascending triangle, very similar to what we saw not in the subprime market, but in the dot-com market. And so if that comes back down into the 2000, that would be a little bit of an M formation. And right now we're seeing slowing momentum. So we're at the very beginning stages of the reversal. If it does historically happen that way, we are seeing the very beginnings of the reversal. We'll see kind of what happens in the summer months. I think July is a very important month for the market. I think June is a very important month for the market, and it's going to be interesting to see how the market responds at the, basically 6 years after the bottom of the market. Everybody knows the markets can't last forever, and we're starting to see signs of slowing momentum in the market. We're starting to see the economy falter out there. We're starting to see, bubbles form in the international market as well as here in the U.S. markets, and it's just having a very difficult time over the last 6 months or so. I mean, and go look at your retirement accounts. Look at what you did in 2013, then look what you did in 2014 from a percent wise, and then look what you're doing in 2015. And what you'll see, guys, is if you look at the marketplace right now, the market is at 2084. The market has not made a dime this year, not made a dime. And if you track it all the way back to December of last year, we're now going into 7 months where the market really hasn't done much at all. And that's because it's slowing its momentum. So we're seeing a lot of slowing momentum. It's the beginning of the reversal, not the end of it, but it's going to be a heck of a ride coming in. And luckily, you're with the best team in the world out there with Tackle Train to help you navigate through these choppy markets, as we continue to see the reversal show its ugly teeth. This has been Matt Justice for Tackle Trading. I hope you enjoyed the video. Check out everything we're doing over there with the newsletters, with the coaches shows, with the scouting reports, Gino's options report, my Forex report coming out later on today. Coach Tim's commodities report, and we'll be starting a stock report coming in the very, very near future. So, Matt Justice signing off till next time.